House price rises and a freeze on reliefs means more and more people could be subject to unexpected hefty inheritance tax bills. Planning for the pain of Britain's most hated tax could be something to think about, as more and more people are becoming exposed to hefty bills set to climb above an average of £214,000. Of course, death and taxes are famously two constants in life that everyone has to deal with, but there are ways to mitigate some of the toll taken by the latter. Inheritance tax, IHT, is the HMRC tax on the estate, the property, money and possessions, of someone who's died. The standard tax at present is an eye-watering 40%. According to HMRC, if that estate is worth under £325,000, there's normally no IHT to pay, or if someone leaves everything above the threshold to a spouse, civil partner, a charity or community sports club. However, house prices across the country have risen year on year. According to Rightmove, London averaged £707,098 over the last year. In Bristol it was around £400,000 and in Norwich it averages close to £300,000. If your home was worth £700,000, the IHT on it would be charged at 40% on the value above the threshold, so 40% of £375,000, meaning £150,000. On homes worth over £1 million, of which there are over 730,000 in Britain according to Savills, or 1 in 40 in the UK, the tax bill is likely to hit around £260,000. Writing in the Daily Express, Helen Morrissey, head of retirement analysis at Hargreaves Lansdown, said, "Inheritance tax may only be paid by a relatively small number of people, but there are few taxes more hated by the public at large." A survey we did back in 2021 showed 24% of people named IHT as their most hated tax, way higher than income tax, which was only named by 17% of people. Mrs. Morrissey said there were strategies to mitigate some of the impact of IHT which are worth looking into. She said, "Wealthier people are more likely to be able to deploy IHT mitigation strategies such as gifting to charity or giving money to loved ones while they are still alive, but those people whose wealth is largely tied up in their home, for instance, may feel they have few options available to them to deal with this tax." Mrs. Morrissey added that HMRC IHT receipts were expected to rise almost £1 billion this year, to £7.1 billion. She said rising asset values leaves more and more people exposed to potentially massive bills that many will not have expected or planned for. This month The Times reported Downing Street was holding talks about scrapping inheritance tax as a manifesto offering in a bid to win the next election. A Number 10 source said, "The PM has repeatedly said that he wants to cut taxes for people.